Hi, and welcome to Random Rogers Big Picture for the week of December 7th. First video in a couple of weeks. We are obviously back from Hawaii, and I had a chance in the last couple of days to talk to a couple of different people who work in the retail brokerage world, and I got a little bit of insight. Can't, for reasons of privacy or something like that, can't go into too much detail, but I got an interesting comment from one of the two people I spoke to along the lines of retail brokers, feeling guilt about their client accounts being down so much, and reasonably speaking, also maybe concerned about their own paycheck with if they're asset-based, they do something like that, and their accounts are down a lot, then they're making less money. If it's transaction-oriented, people are scared to transact, and so they're making less money. But the tone of this was just a guilt about being down 40% or give or take whatever the figure was, and it kind of brings up an interesting point here, I think, with regard to emotional balance and what a lot of people feel or don't feel during this. Now, one of the things, and I know I've said this at some points, but it would be difficult to search this in the blog. One of the reasons why I really harp on the defensive positioning thing, all of that business, is to avoid ever having to tell a client, I just didn't see it coming, I had no idea, in terms of action taken in the portfolio. Clearly I was wrong about magnitude, but that hasn't really mattered a whole lot because, I picked a simple exit strategy long before there was any problems, and I just stuck to it. Very simple, and that has, if you've been following along all year, that has helped a lot. I'm not going to beat around the bush. It down plenty, but nowhere near as much as the market. Nowhere near, for the very simple reason. Picked an exit strategy when there was, no threat of emotion. And the idea of having to look someone in the eye, that would scare the hell out of me. I just had no idea. That's why I didn't do anything. That would scare the hell out of me. And I don't know what sort of emotion that would trigger, but, reasonably speaking, I think that would trigger some sort of emotional response. So in tying that kind of sentiment in with you and whatever it is that your portfolio is doing, to the extent you either are or are not beating yourself up, I'm going to tell you, not to. The market has bear markets every now and then, and ideally, if you're watching this video now, even if you did nothing, you can be damn sure that if you're watching the video, you've been reading the blog for at least a little while, you can be damn sure that you will learn from this and take advantage of that in the next bear market with some sort of defensive something or other, so that if the market goes down 30 or 40 or 50%, you're not going to feel every bump down. It makes something productive out of it. And if you've been spared a noticeable portion of the down market, then you've benefited tremendously. If you're down, 25 or 30% in a down 40% world, that's a great result. You've added to your average annual return for the entire stock market cycle, or even maybe more importantly, your entire investing life. You've added, meaningfully to your average annual return over whatever long period of time you want to look at. And that's huge. Seek something positive out of this, because the market will come back. It came back from the Great Depression. I've said this quite a few times before. The timeline of the comeback is either acceptable to you or within what you hope, or however you want to say that, or it isn't. But it'll happen. We'll go to SPX 1600 at some point. And again, the variable is the timeline, not whether it happens. The U.S. isn't going out of business, even if things somehow are different going forward. So, instead of having a pity party for yourself, make something of this. Figure it out. and make something for yourself. For a client who's been, actually, I'll get to that in a second. If you hire someone you pay someone to, whether it's a broker or someone like me or whatever, to manage your money in some capacity, how are they doing? Are they having a freak out? If you are, emotionally speaking, been hit in the face by a 2x4 and you don't know what to do, well, that's a lousy place to be. I've got one client whose former broker, a couple of years ago, didn't know what to do. That's a bad place to be. You got to have some sort of game plan. It can turn out to be wrong, but you need to have some sort of game plan. Or the way I kind of do it is, if A, then I'll do this. If B, then I'll do that, and so on. A couple of different scenarios, and then, do the best that I can with it. There's obviously never a guarantee of result. I think it's okay compliance-wise to say I'm going to make the effort and do this. And so, the next time we have a bear market, I imagine it'll start the same way. A slow rollover that everyone will deny. It'll go below the 200-day moving average. The decline from the peak to below the 200-day will not be so bad. And that'll be the warning to take defensive action. And, that sounds pretty good to me. If you want to do the 50-day crossing over the 200 on the way down. Sounds pretty good to me. Jack Ablin has had success. I think I may get the details of this wrong, but it's something like when it goes 5% below the 200-day, that's when he takes action. There you're really talking shades of gray, and it all worked. Whatever one was the best this time may not be the best next time. I don't think that matters. I think what matters is sparing yourself some chunk of going down a lot. And, it's important to keep a balance for yourself. If you are your own portfolio manager, you pay someone. Me as a, portfolio manager, for any client watching this, hopefully you've been watching the blog for a while or reading it, and hopefully you have a pretty good handle, and I'm not too worked up about any of this. It's probably important for anyone who is a client to know. I think that's about it. I don't know if you can see this or not. That's my 25th anniversary Maui Invitational shirt. Going to that was a pretty big deal. I don't know if I've said on the blog, one year I'm going to go. I might have, but every November that the blog has existed, I always talk about, I'm very excited, because it's on Thanksgiving week, and it's on all day, and very big deal to go, very big deal for me, so nerd alert, to get to meet Bill Raftery, and just the way that happened was just hysterical. He was just standing there, and waiting for some toothless hillbilly like me to come accost him for a picture. But anyway, so keep a balance. Do the things that, make you happy. Don't put all of your time, all of your energy, all of your emotion into just the stock market. You probably end up driving yourself crazy. Here's one. Go exercise. Get exercise every day. Crucial to, dealing with this stuff better. And plus you probably live longer. Alrighty, enough preaching. Have a great weekend.